Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning. Equity markets continue to act very strongly. We talked about the last week, all the different gap ups we saw in the market, and that pretty much has continued through the rest of the last week. And also the NASDAQ is now catching up. The NASDAQ's the one index who hasn't made a new high, but over the last few sessions, the NASDAQ's been acting very strong. And specifically, we pointed out that the technology sector, the XLK ETF, is hitting new highs. Now, a very important sector that's moving up now is also the XLV, the healthcare sector. More specifically, the biotech sector in that healthcare sector is starting to do very well. So we saw, and that was one sector that was just beaten down, was not participating in this rally. So that's kind of bad for the market. But now that we've got the biotechs turning the corner, coming off the bottom, it's a very good sign. And we saw last week, if we look at the biotech ETF, the symbol IBB, it got above its 200-day moving average, which is a very good sign. We also saw Celgene, one of the large cap biotech stocks, also getting above its 200-day moving average and continuing higher. This morning we're seeing Regeneron flirting with its 200-day moving average. It's spent a long time below that average, and this morning it's powering up above that. We saw Biogen gap up. I think it was about a week and a half ago, and again this morning another big gap up where it's about 5% this morning. Similar, Amgen broke out after earnings. That's a little bit extended now. And the one stock that's not quite participating yet is Gilead Sciences, which is one of the largest biotechs, one of the most successful. However, the market seems to think that they won't be able to continue on the hot pace that they've been on over the last few years with their HCV and HIV franchise. So a lot of different plays you can do here. Meaning if you're a pure value player, you might want to take a look at Gilead. If you like chasing the gaps and the moves in the stocks, you might want to pile into Biogen or Celgene for that matter. Want to watch how Regeneron ends up the day or the week. May want to add in shares there. These are all companies that make a lot of money. They've just been been hit with the market and now just starting to finally turn around. Now, if you want to take a look at something that's not quite directly to biotech but in healthcare, you can look at a company like Cynosure. That symbol is CYNO, and basically they make lasers for the dermatology market. They just broke out past about a $53.50 area. They're about $1.50 above that, still in the pivotal zone. Or another company is a software company that's strictly related to biotech companies, and that's Veeva Systems. That symbol is VEEV. They're a little bit extended right now, but if they pull back a point or two, that's something that you might want to consider. They specifically make cloud-based software for the biotech industry. They incorporate everything from clinical trials to compliance with the FDA to sales data for making it all one package, which in the past it was very fragmented in this industry. So again, I gave you a lot of names in the biotech space, but it's very encouraging to see they're moving forward. And generally in the market, all this move is being supported by the earnings. Out of the 63% of S&P 500 companies that reported so far, 71% have beat the mean estimates on earnings, and 57% have beaten the mean estimates on sales. So, in summary, this trend should continue. We're in a good market. You might want to take a look at the biotech space, but as always, let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.